Look, I know that trading can be an uphill battle. And I know a lot of new traders that, for one, probably watching this video, and anyone who's watching this video, I really want to show you how I trade on a daily basis. We have plenty of individuals that are part of our community already, that are subscribers as well as Discord members that are watching this video today as well, but also understand, how I trade, okay? And personally, I'm not telling anyone to trade like me or to follow behind the way I trade, but using supply and demand, I'm going to show you a simple strategy, which you probably could try to and back test on your own and practice to see if it works for you. But it's very simplistic way and style of trading. But the thing about trading that you need to really understand, and we're talking about futures, is you got to grasp and master market structure as well as price action. Those two things are king in the world of trading. If you think that having just a strategy is going to provide you the means or opportunity to become consistent on a daily basis, it's not going to. You may get lucky, and the strategies, they do work, if you spend time back testing them and, determining how well, what's the win rate as far as like the percentile of win versus losses and things of that nature. But I don't want to get involved in that, because that also has a lot to do with a person's psychology, their emotions behind, driven behind trading, lots of different factors. It's just not, some people think that, the strategies doesn't work. No, the strategies work. It can be just you and how you trade and who you are as a person. You may not be patient. You may have a lot of greed on the inside of you. You're chasing the market. You're taking breakouts and, everything. It could be any of everything, or one thing in particular. It just depends on the person. That's the thing about, I find myself now making all this video content, is that after years of seeing and kind of coming across different traders, whether it be on a Discord or people making comments in the community, I see now that there are so many varieties of people out here that have so many different personalities, and people are struggling with different things when it comes to trading. If they just kind of make things simple and become disciplined and look for the right things, when I'm saying that, I mean what I'm saying is setups, okay, surrounding supply and demand. Now, you can trade how you want to. You can trade support and resistance or whatever your strategy and how it works that you learn from somewhere else. But I'm talking about supply and demand on this channel here and how I trade it. And all it is I'm using basically kind of multi-charts in a sense, pair charts. I'll mark my zones off of a higher time frame and then use a lower time frame as my entry chart. But I'm looking for the same repetition of the breakdown, the strategy to happen over and over and over. And sometimes I could trade just using my lower time frame chart, but I want to make sure I'm trading in the direction of the higher time frame, okay? But this video is more so to show the strategy that put me on the right path of being consistent and profitable, okay? And it wasn't really until I started using this, kind of devising and tweaking and finding a strategy that works for me. That was when things really started to unfold for me, and I had my aha moment. The door opened up, my eyes opened up, the key unlocked for everything else to fall into play for me. And then I started seeing my profits to grow. I started to become more consistent, taking a little bit off the table each day. But let me share with you, because I know a lot of you out there are probably thinking about, this doesn't work, I'm gonna give up, I'm tired, I spent countless hours and years or possibly blown a lot of money trying to get this thing perfected and make it work for me. But I'm just going to show you what works for me. I'm not telling anyone to follow behind me, but I'm going to start off with the ES. I'm just going to show a few examples today of what I'm talking about. And you have to understand, not every single zone is going to work out. All right. So many people, they drive me nuts when I see them, because they want to quickly say, strategies don't work, this don't work, this don't work, that don't work. Look, nothing's going to work 100% of the time. Trust that. The thing in how we minimize and make it in this business is called risk management. Is knowing when to gather trade early enough to preserve your capital, because we aren't the banks and institutions, and that you must understand that in every business, no matter what industry it is, somebody is pulling the strings, okay, to make things work in their favor. And when it doesn't work, we have to know how to protect ourselves, how to preserve our capital, and move on to see the next trade. That's called risk management, having proper trade management, knowing who you are as a trader, knowing when to get in, knowing where to get out when something's not working for you, to live to see the next day, okay? Nothing works 100% of the time. And it kills me, because people think that they want to point fingers at individuals when a strategy doesn't work and say, well, I tried that and it doesn't work. Now, I'm not saying everybody's strategy work. I'm not saying that. I'm not saying you may have spent $1,000 for somebody's course and you come to find out that it's not working for you. Possibly. But I'm not here to sell anybody no trading course or mentorship. I'm here to share with you just based on publicly how I trade, personally how I trade, and it's up to you to try it or not try it, you know? I'm not saying go live with it tomorrow and start trading and then, oh, it doesn't work. No, spend time. I spent hundreds of hours, you know, perfecting what's going to work for me, and what works for me may not work for the next. But anyways, getting to what I was saying here, we're looking at a chart here of the ES futures, okay? All right, maybe you trade the micros, all right? Maybe you are a Forex trader coming over to the futures market. Now, I just want to share with people today, you know, what are some of the rundowns or the strategy in detail of how I do it. First and foremost, you've got to understand market structure, okay? And that is nothing more, excuse me, but understanding the flow of the market. Up, down, 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 whatever. You know, is it making higher highs and higher lows, or lower lows and lower lows and lower highs to the downside? We're making higher highs and higher lows. I'm showing you an example. So we're going with the flow of the market, okay? And then even when we move down to a lower time frame chart, we want to trade in the direction of the higher time frame. So, but in this case here, what I'm doing is I'm using a higher base or higher time frame chart. And when I'm speaking of time frame, I don't trade time charts. Please don't ask me why I chose range charts. Have I ever traded time charts? I've answered those questions a million times, spent time watching the videos. No, I have not traded anything other than range charts. Why? Because it's just cleaner to the eye to me. That's it. Simply, point blank, okay? But the market is making higher highs and higher lows to the upside right here, okay? I want to show you an example of what to look for. Now, when I trade, I like to typically see what I call gaps, meaning when there is basically a void or gap back at in this case here, I'm going to show you an example of a demand zone, okay? All that means is that it increases the probability of the trade probably working out if it gets back to that zone because it's untested. Untested zones mean the market, the banks, institutions were trying to fill orders, say for example, where the market is making higher highs and higher lows, we're breaking structure. Breaking structures are, when the market's breaking structure, you got to think about what's going on there. They're pushing the market in a certain direction, like here, pushing it up, breaking above this area here, structure break, pushing it up, pulling back. This is a lower high. A higher low, and then the market does what? It pushes higher here, as you can see here, creating an area of demand right here. Now, this right here is what I like to classify as a low probability zone because you see this candle here, this bullish candle here that broke below this last down bearish candle, it is a bearish candle, but it's, you know, anyways, moving on. It's not a full on bearish candle. You can see that as kind of like a doji in a sense. But anyways, the market pushes higher here. We break above this candle right here. So we got a bullish candle that takes out this candle here. With the third candle, what does it do? The wick of it comes back and it fills in the gap or imbalance there. So this makes this more so a low probability zone. If there is a gap, meaning where this bullish candle took out and then it kept running to the upside, but without it pulling back any, and even a wick of the third candle coming back and tapping into the top end of the last down bearish candle, then we would have a more of a high probability zone. But even low probability zones, I prefer high probability zones. We'll take a look at an example too after this example right here. But this is a low probability setup. I want to show you that low probability setups can work, but you just have to be mindful and look for rejection. That's what it's all about, is confirmation and rejection off of the lower time frame chart. But paying close attention to structure of the market and price action as you know, we're tracing back to the zone. So in this case here, you can see that the market is doing what? Running to the upside here, creating a demand area, low probability zone. We got a break, pull back, another break of structure. But then the market runs lower. So we got aggressive selling to the downside. We took out this area here. You know, if you see something like this where we're running lower now and the market takes out and starts breaking levels to the downside, well, that's the market possibly trying to shift direction. Now, that doesn't mean that it's totally shifting direction until we really start to see what we classify as breaker structures lower, as it is taking out levels to the left-hand side of the chart. Say it's taking out areas like right here. Okay, as it's moving lower and we start to see structural breaks to the downside, then we can say the market is trying to change direction. For how long, we don't know. You know, the market's going to do what it wants to do. But either way, in this case here, the market comes back to this demand zone. We see that right there, okay? When it taps that demand zone there, it's low probability. All we need to do is One, we want to see what is resting above us before we look at taking this trade right here. Okay, well, we have an area of resistance right above. So when the market bounces off here, we're going to have resistance sitting in above us where the market could stall out at. All right, okay, but this trade could still work out and pull back to the upside because really we haven't started breaking any area, making structural breaks to the downside yet. Even though we started taking out levels to the left hand side, the market full on quote. Well, I should say, what the market hasn't done is really shown us structural breaks to the downside. Which once we get what the market has taken out, say, levels to the left hand side of the chart and making structural breaks to the downside, then that's going to tell me that, okay, the market is trying to shift and change direction. Again, we don't know for how long, right? But what it did do was push lower here, tapped into this demand zone. We have resistance right above. Now let's move down to the lower time frame chart to see, do we have or can we get into a trade like this? Now, again, be mindful because we have resistance right here, but that does not mean that the trade won't work out. Or could not work out. It could definitely do so, but I prefer to see the market test an area of resistance to see what it's going to do first, and then maybe get a pullback to see if it's going to break higher, because we do have areas of imbalances resting above. We have an imbalance right here. We had an imbalance resting right here back up to this area of resistance in which it tested. It rejected off of the demand zone here off the higher time frame chart and went up there and tested resistance but filled in the area imbalance, and we still have enough room where we could trade going up to the upside as well. Because what? Because we have an imbalance resting up here around 49.82. So now let's move down to a lower time frame chart. I'm going to show you what I look for with the strategy. Okay, this blue box is that higher time frame or higher base chart demand zone. I'm not looking to trade off of it as soon as it gets back to the zone. Not at all. I want to see where the market is changing direction and showing me where it wants to break structure to the upside and a creation of a demand zone to trade from. Okay, so first, I want to see where the market is changing direction on the lower time frame after it's tapped into the higher time frame demand zone. It's changed direction here, broke above this area here. So I'm slightly interested at that point. But I also want to see where it's breaking structure to the upside. Two things must unfold. And then I want to see where there's an area of demand created with the structural breaks going to the upside on the lower time frame chart. Now, be mindful because I said that around this area here, let's go back to the lower time frame. There was an area of resistance, which I think is right around this area here, around anywhere between 60 up in this area here to 70. So all that is this area here. This is an area of resistance resting right here. But we do have imbalances as well that are resting above. The market has to correct itself. We should know that by now and fill in those areas of imbalance. So in this area, you can see all this area of resistance right here. It's going to have to fight and push through. But it is breaking structure to the upside. Okay, you see that. So maybe let's say you wanted to take it up to 60. Okay, and maybe right here you see it changing, breaking through to the left hand side anytime it starts taking out levels, and then we got structural breaks to the upside. So pushes up, pulls back, breaks structure to the upside, and we have a demand area here. Okay, it broke this level here, structural breaks to the upside, pulls back, pushes up, small area of demand off the 12 range. There's an area of demand resting right here. We got another structural break. So let's say you wanted to get into the trade when it pulled back right here, and then you wait for the break and the close. That's the last part of the step I'm looking for. Rejection back at a demand zone on the lower time frame. Pulls back. We get the break and close of the last down bearish candle. The break and close above that. So maybe you got in here at 54. You can take that trade on up to around 60 and pick yourself up 5 points. But once we tap into 60, somewhere in that area, we got resistance in that area. So be mindful what could take place. Now, what it did do, it kept pushing higher. Go back to the higher time frame, and it did tap into this area of imbalance resting right here. Now that I see that we're tapping into resistance, we feel that area imbalance, I'm looking above to see, could it possibly want to push higher up to around the 42 or 43 area. Let's go back down. Let's go back down to the lower time frame to see if we can get a entry. All right, so it goes up there, taps into that 60 area. We got that imbalance area, the first area imbalance off of the higher time frame I showed you. Okay. And we want to trade going to the upside because the market is showing us that it wants to push to the upside by breaking structure on the higher time frame. Okay. So anyways, we're back down here. We see the market tap into the area of resistance on the lower time frame. And now that we're in that zone, basically what we want to see is, okay, can we get another setup to continue running higher and go up there and test this area of imbalance resting up here at, what did I say, 83, 82 area. So let's go back down to the lower time frame right quick. Okay, blow it back up. All right, like I said, be mindful. We're breaking structure to the upside. What we're looking for the market to do is pull back to an area of demand, again, on our lower time frame, which it doesn't. Pay attention. Pushes up, pulls back. Break structure, pulls back, okay? And then it breaks structure. But if you can see here what it did, it pushed up, pulled back. It did slightly break structure here, but it wicked out below right here and tested this area of support. We don't really have where it rejected off an area of demand, okay? That's what we're looking for now in the lower time frame as well. Pushes up, break structure again. We get a pullback, but it's breaking structure back down lower. As you can see here, it's moving lower and it's taking out areas to the left-hand side of the chart, the levels. And so then it pushes down, doesn't give us a clean pullback to a key area of demand. This would have been demand right here. It pushes right through it. Pulls back, makes a lower high, and then break structure going lower. So, I'm not, right now, I'm standing down because the market is not giving me a clean setup to want to continue taking a trade going to the upside to test that 82, 83 imbalance area. So the market breaks structure here. All right, but pay attention and see what it does here. It pushes up, starts breaking small areas of structures, creating breaking structure to the upside. All right, look above here what it does, above 75.25, I believe. Okay. All right, so it pushes higher, but then it comes down. Okay, we didn't take out and start continuous structural breaks to the downside. It came down here, tested the lows, wicked them. Okay, basically grabbing an area of liquidity, and then a sweeping liquidity there, and then it broke structure to the upside. Okay, all right, started breaking, excuse me, guys. This thing keeps sticking on me. It broke above this area here at 71. Okay, so it broke structure, pull back, boom, we break structure to the upside. Okay, but look, we're still looking for the market to pull back to what? So basically, it's kind of ranging right here, moving sideways. We're looking for the market to give us a clean demand setup off the lower time frame now to take it higher. All it did right here was come down, start breaking structure, turn back around, start breaking structure, but no clean pullback with a break and close of a candle in the opposite direction and in a demand zone. Now, it does run lower, but when it runs back again, what is it doing? It's breaking structure back to the downside, took out an area here, a level right here. Coming back, now this is a demand zone right here, but look, we've already started breaking structure back the opposite direction. That's the thing. So I want to see where it's breaking structure continuously to the upside with the pull back to a key area of demand where it hasn't turned back around and started breaking structure lower. So I want to see what's breaking structure up to the upside and not re-breaking structure back down to the downside is what I'm trying to say. Pulls back, breaking structure lower again. So again, I want to see where it's breaking structure up and staying in movement of that direction. Comes back to the demand area. Look what happens here though. Pushes up, okay, and what does it do? Well, it comes back down here and breaks a little area structure back again lower. Now, right here, it pushes up, okay, takes out this level right here as it's pushing higher, okay. We got a small structure break here, pushes up here, okay, breaking above this level here, the small area of demand right here. So, right here is where I would be interested in going long off of this area right here, okay? Now, that's a tricky situation here because we have the market moving sideways, right? So, but this is a turnaround when the market is pushed up, pull back, broke structure, took out this area right here, the small area above 65.25, pulls back, small area demand, you can go long. But what does it do? It turns back around. You're going to put your stop somewhere, this is below 57, which is a supporting swing or supporting area below 57. But I tell people don't put their stop tick unless you want to, because they're going to come back there and test that area. A lot of times they'll come there and test that area, wick it out, and then continue the market moving in your direction. And I'm showing this as an example because this is exactly what took place here, because they're grabbing liquidity, stopping traders out, and that's what they do to give them fuel to push the market in the direction in which they're trying to go. When I saw this ranging right here going on, I started looking for an opportunity on a setup off my lower time frame on a demand area to go long up to that 82, 83 area. But look, I was golden still. If I got into the trade right here, where it pulled back right here and waited for like a break and close of a candle above. So basically at here at 64.25, the market goes up to 69 before pulling back down here. So my stop, if you put your stop at 57 below this small area supporting swing right here, you got stopped out. I always say, give yourself some room. With the Nasdaq, you're going to have to, whether it's 3 or 4 points. If you position your stop back below 57 and gave yourself 3 or 4 points room right there, look what they did. All they did was wick that area out, okay? to stop traders out, and then they ran the market all the way back up to the upside. Okay, and then you could have got out around, like I said, at 83 or 82 to fill the remaining portion of that imbalance back up towards this high right here. So it went up to 82 or 83 area, back up to this high right here. You see that, okay? So I'm showing you that how the market moves, you know, how the market makers, what they're trying to do in the end all things. And you have to think logically like them when you're looking for trade setups. This was a golden or good demand zone to trade from, but we had resistance above. Just wait to see what's going to happen after the market taps into that area of resistance. If it is going to, you know, basically pull back, reject, and then push higher to fill in the rest of the imbalances back to the upside. Again, we didn't get any structural breaks to the downside here. We did take out a level here, tapped into demand, pushed up, tapped into, or, you know, smacked up against resistance, but then it decided to push lower. To push higher. So you've got to look to see and understand, even if they test an area, in this case here, of resistance, can they push higher? You got to look for the opportunity. You got to look for the rejection below, okay, to see if they're going to continue pushing higher, all right? Now, had this thing started breaking structure to the downside and started taking out levels, then I wouldn't have taken this trade. I would have been very, very mindful of what's taking place. And then on the higher time frame, I would have waited for a structural breaks back to the upside before I would have started looking for long positions again, all right? So hopefully that setup there makes sense. I try to break that down in detail to show you a variety of different things that could possibly happen, but to also incorporate and show you there are times where they're going to go back and wick you out or stop you out or try to stop you out if you put your stop right at the back end tick to tick of an area at a support and swing like I just showed you here on this lower time frame. Where I would have personally gotten to the trade at on this pullback to the small area demand, they come there. Where do they go? 57? How much lower do they go? 57 and 3/4, 57 right there. So we're talking like not even full on 2 points there. A point and a half, point and a 3/4 before they turn the market back around and started going back in the same direction to the upside to fill imbalances back up. So this is an example again off of the ES futures, which is the E-mini S&P 500. Same thing. You know, if you're trading the micros, all right, the micro MES. Let's move down to take a look at an example on a Nasdaq and maybe look at a supply setup, okay? Just trying to show you an example off of one market and then another example from another market. All right, so here's a great example right here on the, we're on the Nasdaq futures or the E-mini futures. Let's take a look here. All right, you see this area right here? This is right towards the close of the market on Friday. So the market was moving higher, making higher highs and higher lows. Then it shifts, okay? So we get a reversal on the market and starts breaking structure lower. Then it shifts again, starts pulling back, right? And there's a major high sitting up here. All these areas in between, I like to consider them like internal or minor areas of structure leading back to the upside here. And then a major area at 145 there. A structure there, area there. If it breaks that, it's a major structure break back to the upside. But again, this is off of my higher time frame, my higher base 60 range chart, in which I like to mark zones at. But the market's moving lower, breaking structure, taking out levels to the left hand side of the chart, turns back around, start getting structural breaks to the upside. It starts to kind of move sideways here because then you see it starts to move lower here again, breaking structure to the downside, taking out levels, and then kind of chopping back and forth, you know, going back to the upside. But what it's trying to do is, if you can see, is just it's pulling back to push lower here. So as we're making moves back to the downside, what is that? It's breaking structure back lower and taking out levels within this leg here to the upside, okay? So when it's doing that, so it looks like this. Let me show you for those that have a hard time possibly seeing this. It's making a low, lower high, and then lower low, lower high, lower low. Now take a look at what happens in this area right here. We're breaking structure down to the downside. We're taking out levels to the left hand side of the chart. Take example. This is why I say market structure and price action are king, and you must understand them or you're not going to succeed. I'm just going to put it out there. I'm going to be straight up honest with you, because if you're just trading purely just based on a strategy and you don't know how to read the market, listen what I'm saying, guys. Please, I'm saying this for a reason. If you are just trading a full-on strategy and do not understand how to read the charts and read the market, that strategy at some point is not going to work, okay? All right, it's working only because of the fact is that you may be getting lucky. But I'm just trying to tell you, when you couple a strategy, all right, with what you should know from the beginning is how to read the market, then that's when you have a recipe for profitability, consistency, and you're going to make money. Again, we're breaking structure to the downside here. All right. Now, look what happens here when it pulls back. Remember what I said about a zone being untested, where there's a gap back at the zone? Well, we have that right here. This here is a beautiful supply zone right here. Okay. And I'm going to take these arrows off now so we can just kind of focus in on this area. It's a beautiful supply area where there's a gap resting back at the zone. Okay, so the candle that took out that last bullish candle to the upside on the swing lower, that bearish candle there took out this last bullish candle to the upside. Look what happened. The third candle, or the next candle did not immediately come back. It left a small area of a gap or void back at the zone. Okay, so that makes it a high probability zone for me. It's untested. You know, they pushed away from the market real quick to the downside, aggressive selling. So that means that more likely when they get back there, they're going to look to finish filling in or filling the rest of the orders on the table, because they got to fill them. Okay, and they want to correct the market by pulling back to the zone, filling any areas of imbalance. But anyways, they want to possibly keep the market doing what? Pushing lower. So, and they do that too. So take a look. It pushes lower, pulls back, left a gap void, pushes lower, structural break, pulling back to a supply zone resting right there. Now, all I need to do is look down at my lower time frame chart, and I'm going to aim for lower areas, possibly to come down here and finish filling in the rest of this imbalance down here where at 960, exactly what they do. So let's go down now to the lower time frame around the, I'm going to put this on all charts so we can see it on the 12 range chart. 12 range is my entry chart where I take my trades from. I do not take my trades from a higher base or higher time frame chart like the 60 range, because I'm not a swing trader, I'm not a position trader, I'm not looking to sit into a trade for hours on end. So let's move on down now. Okay, here we go. This is that blue box, the 60 range demand zone, okay, off the higher base chart. So now all I'm doing is doing what? The same thing I did before. I'm looking for the tide to change, where the market is breaking levels to the downside, creating structure breaks to the downside, and a supply zone created, not a demand this time, a supply zone, beautiful supply zone created to where I can take the market back to, or the market retraces back to on my lower time frame, look for the rejection with the breaking close of a candle lower, and boom, I'm aiming for lower areas, at least for the market to come down and test down here to fill in these imbalance, like right here. We have an imbalance there at 87, imbalance here at 78, and maybe come down here and test the low at 67. Okay, so let's see what it does. All right, so it pulls back to that area. We're breaking structure to the upside on the lower time frame. I'm on my 12 range now. See? Okay, this is where the magic happens. So what does it do then? It pushes lower, pulls back, breaks lower, taking out levels here to the downside, but we also have a structural break here, but we also have what resting back here? A supply zone where there's a very small gap or imbalance at, which does what? Which gives me the, makes the zone high probability. So I got a high probability zone on my higher time frame, a high probability zone on my lower time frame. I got the pullback to this supply zone on the lower time frame, and all I need to do now is look for the break and close of the candle. Last bullish up candle, break and close right here at 18,009 3/4. I'm going short, and I'm going to take it all the way down to and fill in every bit all the way down here to 78. If you did that, then you picked yourself up some very, very, very sweet points all the way down to the downside there. And maybe you could have rode it and taken it all the way down here to where I said to the low right here at 67. And the way to do that, take a look at this. I talked about this before. I'm going to take a line. Okay, so we got into the trade here because a lot of people say, okay, well, how would you have stayed in that trade? I have a hard time holding trades. First and foremost, let's go ahead and classify where our stop would be at. Our stop would be back here at 18,016. Now, why? Because that's the supporting swing, okay? Well, that's the back end of the supply zone. You can put it back here at the supporting area where you got into the trade at. So we got into the trade right here at the break below 18,010, right here at 18,009 3/4, okay? The supporting area is right here at 18,015 3/4. Give yourself some room, a few points, 3 or 4 points, on the Nasdaq, maybe back up here to 17. And you see the market pull back and never came back and tested that area. Okay, so you have two areas you can put it at: the back end of a supporting area where you got into the trade at, or you can put it on the back end there where, in this case here, supply is at on the lower time frame. We get the break and close lower. How do we go about staying into a trade and aiming for that? To fill in those imbalances to the downside and possibly that low at 67. All right. So we got in here, right? The market pushes lower. It pulls back. We get a lower high, break, a low. All right. When it does that, then move. If you got your stop resting right here, then move your stop here. This way you start locking in profit. Each time it breaks, makes a new low, and then on the back end you have a lower high, pull it back there. Low, lower high, breaks, pull your stop right here. Okay, so now you got in here at 9. Now you're down here at 8:05. You locked in yourself in a good what we got here? 9. You locked yourself in a good 4 points right there. We're in 4 points profit locked in now. But even though the market run lower now, okay? So we had a low, pull back, broke lower. So 993, the market's down here now, but pull your stop here because the market likes to test the back end of swings each time it makes a new structural break. So with that said, so the market makes a low, lower high, and breaks lower down here at 86. Boom. Move it down here now. The back end of the new lower high that's formed. Again, each time it makes a new lower high and breaks structure to the downside, just keep swinging your stop back behind the last lower high is what I'm trying to say. And you're locking in profits by doing that. And that's how I've learned over the years to be able to hold my trades longer. Guys, hopefully this makes sense to you guys. Just go back, rewatch the video, take your notes. Get a pen and pad. That's the best way to do it. Sit back, take your notes, and rewatch. Stop, pause, whatever you need to do. I'm telling you, this stuff works if you back test it, okay? We have successful traders that are part of the community that trade similar to the way I do, and they're profiting. They're making money. Lots of them are passing their evaluations. I don't trade prop firms, okay? I'm talking about the reason why they just didn't exist when I started trading many years ago, and now they do. So nothing wrong with them. You know, I have no, I don't know much about them. I'm going to say I'm not. If anybody asks me which one to use, I don't know. Okay, be honest with you, I just see people using a variety of them. Okay, out there, Apex, My Funded Futures, and a list of them out there. I don't know which one works better. Top Step, and people find more value in over the other. You can come to the community over here, join the Discord by finding the link down in the description. We have tons of community members that trade those prop firms, and each person can probably tell you, in their own opinion, which one works best for them and which one they find that's better, okay? But again, I mean, this is a way to be able to pass those evaluations. This is the way to be able to trade with your own capital. But I do recommend anyone trading with prop firms is to save your money while you can, okay? Through withdrawals, and then, wanting to position and put those funds into your own individualized or personal account. I recommend doing that, okay? But that's up to you. But again, if you found value here in today's video, please do me a favor and drop a like on the video, okay? Hit that thumbs up button. If you're not a current subscriber, what are you waiting for? Great content surrounding trading futures here on this platform or on this channel here. So join. Click on the sub button down below. Make sure to turn on all your post notifications so you never miss one of the uploads here on the channel. Again, if you're interested in joining the Discord, the link is down in the description portion of the video. Basically, you'll see 2 links. One is the Discord link, the first one, and then below that, you'll see one that says Become an Elite Member. That's if you choose to do so. And the elite members, they receive private videos, more content surrounding my trade breakdowns where I go into detail about trade setups, as if you were sitting next to me. So I break things down from my mindset, what I'm seeing going on, why I took a trade, where I'm looking to take the trade to, where I would position a stop at, things of those natures. Because lots of traders have sent me comments or DM me and said, love the trade breakdowns. They've helped me tremendously. So if you're someone that's interested in becoming an elite member or elite channel member, all you have to do is click on that link down below in the description where it says become an elite member. Click on that link. You'll see 2 tiers pop up. One will say loyal channel supporter. The other one will say elite channel supporter or elite channel member. That one is $6.99 a month. That gives you access to the trade breakdowns and the video playlist, which is a hand selected list of videos that I pulled, off of the channel that I think that cover most valuable information. Okay. But again, it's $6.99 a month. We have tons of members that have already signed up and joined. I thank you for doing so because you're supporting my efforts as a content creator here on YouTube. So thank you for doing so. But I'm giving back, what I feel is something that is very valuable back to you. But anyways, appreciate each and every one of you. I'm gonna wrap it up. Today's Sunday. I'm, kind of going to sit down and look at my charts and kind of gear up for this next upcoming trading week, which I highly recommend each of you do. The homework never stops, okay? If you want to be profitable and succeed in this business, take care. I'll see everyone in the next video and have a great rest of your weekend.